Hello, it is the 27th of April 2011. No, it's the 29th of April 2011. It's 11:27, and that's where I got the 27 from. As of the recording of this video, we'll start off within the weekly time frame. So far, it's been holding up well after the break of this resistance field, and it's in a nice uptrend. We are most likely going to have our sixth consecutive up week in a row. It would take another 2% loss from here on in. And on many other charts, they have this close at 46 because apparently they think last week, or some people think last week, that the market was 46 and change. No, it was 47 and change, but we're still higher than that. There's also 7, 8, 9. This is 13 of the last 14 weeks towards the upside. Now, what's encouraging on a bullish point of view is we've already had some nice corrections. This is the type of candle that's almost like a correctional phase within the uptrend. Because of this little down move, that tells us that we have corrected on a shorter term time frame, and of course that correction is right in here. Now, as far as the last little while, I got a lot of mixed signals, but overall they work out towards the bullish time frame, as there wasn't resistance along in here, and it did a spectacular job in holding above this level, and it still has held above this level for quite some time. Now, the mixed signals come from, well, why is it taking so long? Why do we continue to correct within a range primarily between 48 and $49 per ounce? Wish I could tell you, don't know, but as long as we continue to stay above this level, then things are still going to be within the bullish trend as long as we stay above the 5-day moving average. Now, if we continue to correct through time, then what will happen is the moving average, like the 5-day moving average, will meet up with it, and then sort of like we see in here, start to turn sideways. Alrighty then, as far as the Fibonacci for the 4836 level that I talk about, that's from the upside regarding the $4 lows and the $8 highs from the earlier part of this decade. 4836 would be roughly somewhere in that area in here. So when it first came up to it, it was resistance. Since then, it has consolidated exactly in the area of $48.36. Now, this area is supposed to be significant resistance on the longer term time frames. It's barely even given us resistance on the long term. It's so much to the point where the weekly line chart looks like this. Now, in here, it's really tough to see here that, okay, it didn't hit the 3142 area. It actually did, because this is weekly close line only. And it did come up to the 3140, had small retracement back down to 26, and then bursted through it. Whenever you have very little resistance or no resistance at these major levels, you can expect a major move to the next one. That's exactly what happened. Now we're at this level again here, where we're supposed to find resistance. Bullishness is to come back either partway through or even back down to 3142 before lifting higher. Now, of course, if there is little to no resistance at this level, then it should be fast to the next one. Now, I think I've said a few times that it's 78 as the next one. That's how many cents it is. It's 75, 78 within the $4 to $8 calculation. Therefore, if this is not resistance, it will be fast. And what another key level is twice in a row to have it happen would make it even that much faster, starting the parabolic up moves. What I'll be looking for mainly would be a connect of this trend line that connects the highs from 2004 and 2006, at least on a logarithmic level, and that would be coming up above this key trend line in here. Alrighty, thank you for watching and have yourself a great weekend. Bye bye.